Hello and welcome. You tune into Market Fatafat with me, Ankita, Saxena, and with me is Kanishka, Sarkar. In the next half an hour, we'll take you through all the stocks that are in focus, either on the back of news flow or on the back of technicals. But at this juncture, let's first find out how the market is shaping up. Kanishka, it's a very weak day of trade coming in as far as markets are concerned.
Absolutely, very weak day of trade, like you pointed out. If you look at the Nifty, we're just hovering close to that 25,700 level. 170 points is what we have seen, a cut of 170 points right now, 0.7% lower there. Asian Paints, HCL Tech, BHEL, some of the counters that are managing to hold on to the green, but otherwise it's the like of NTPC, ICICI Bank, Adani Enterprises, Bajaj Auto. All of these counters are dragging the Nifty lower, down about 170 points over there. Now let's also talk about sensex, which is actually seeing 0.7% downtick. More than 560 points of cut is what we are seeing on sensex. So yes, major cuts over there as well. Nifty Bank doing slightly better than the other. 259,280 is where it's holding on to. But yes, over there as well, 400 points of cuts on Bank Nifty. So yes, that's the kind of moves that we are tracking. If you talk about the NSE advanced decline ratio, it continues to be in the favor of declines with 624 stocks in the green as far as the NSE advanced decline ratio is concerned. Apart from that, 2,241 stocks, all of them in the red. So yes, that's how the breadth of the market is looking, Ankita. But let's get started with the show and talk about all the top buzzes in trade today. Kunal Farad, the Vice President, Technical Research and Algo Choice Broking, is the guest with us on the technicals. Hi Kunal, good afternoon. Thank you so much for joining us today. And let's get started by all the stocks that are in focus. And first up, of course, is Vodafone Idea, managing to hold on to some strengths that we saw since morning. Now the company is in focus after it has laid out a long-term structured plan to repay its massive AGR dues, easing the near-term cash pressure. Now, we did see some gains in the morning, but after that, the stock has given all of those gains, trading about 0.5% lower. Now, remember, the telco in an exchange said that a large portion of its AGR liabilities that has been frozen, with repayment starting at just about 124 crore rupees per year for the next 6 years. That's beginning March of 2026. This is followed by smaller annual payments with bulk repayments pushed into 2030s and up to 2041. Now, this comes after the government approved a partial moratorium, freezing nearly 87,700 crore rupees of AGR dues and giving Vodafone Idea a long runway to pay. And remember, very importantly, that the government now owns a 49% shareholder. It is, and it has backed the move to ensure that business continuity and also to protect nearly 20 crore subscribers that Vodafone Idea has. And following this development, the stock did see a run-up of about 4%, but now it has given up all of those gains.
All right, moving on from Vodafone Idea to the next counter that you have picked out for us. Ajit, you've picked out HCL Tech for us. Tell us what you see on the charts. This one, is trading with gains of a 1+% right now. Also, on the charts, this has shown some weakness. In fact, it has been in a corrective phase for the last 6 months. But from here, Kunal, what do you see on the charts for HCL Tech?
Well, first of all, good afternoon. And if you talk about HCL Tech right now trading at 1665, technical structure looks very attractive at present level because stock has already given a breakout of its upper band of symmetrical triangle formation. Not only this, stock has been trading above 100 days moving average on a daily chart. And if you talk about weekly chart, even weekly chart is giving some kind of sense for an upside momentum because weekly chart stock has been trading above 100 weeks moving average. So overall technical chart looks very attractive at present level, and based on this ongoing improvement, we may see a very good upside momentum in this counter. So one can get into the stock at present level. Stock is trading at 1664. And if you talk about SL wise, downside strong support comes at 1580. Overall momentum looks very attractive, and based on this momentum, we can see very good upside momentum up to the level of 1730. And if stock breaks this level, then further upside would be there up to the level of 1835. So yes, for HCL Tech, it looks very attractive for creating a long trading perspective, position perspective.
All right, moving on from HCL Tech to IEX, that is in focus today. In fact, that surged to near 6-month high before retreating almost 6%. As the Electricity Appellate Tribunal, APTEL resumed hearing in the high-profile market coupling case. Now, IEX in its submission to APTEL highlighted that the CERC had issued a corrigendum converting the market coupling order into a direction. Now, the company termed this retrospective change unusual given that the case is still pending. IEX argued that the CERC order is arbitrary, violates principles of natural justice, and would erode the market share without delivering any tangible benefits. It also pointed out the lack of clarity from CERC on withdrawing the coupling order. On the back of that, IEX is in focus.
All right, so that's IEX for you. But moving on, Kunal, you have picked out Oil India for us, right? And it's trading just about 2.5% higher today, maintaining that strength in an otherwise weak market. Just wanted to understand, where do you see the momentum going from here on?
Well, if you talk about oil in India, this stock looks very attractive at present level. The stock has been trading above its 100-day moving average. Not only this, even in this free fall in the market since last two trading sessions, this stock is trying to manage its momentum above its 100-day moving average. So it is outperforming the market and also generating an alpha for our viewers. So one can get into the stock at the present level. Now, if you talk about even the weekly chart even also looks very attractive because on the weekly chart, stock has taken the support at 388 level, which was the strong resistance earlier the stock faced. Now, if you talk about overall picture, we may see some kind of northward direction discounter from the recent level. If you talk about SL side, one can keep SL at 388. Right now, stock is trading at 420, and if you talk about target wise, the way stock has been trading on its daily chart, first target would be at 444, which is previous top, and if stock breaks this level, then further upside would be there up to the level of 485. So somewhere around 15 to 16% of return that we can expect from this counter at present level. So yes, Oil India looks very attractive at present level.
So Oil India looks very attractive at the current levels. But now let's also talk about BHEL, which saw a very significant fall yesterday. But today it continues to be in focus on the back of two news pieces. Now there has been a key order win and also brokerage support following that sharp recent correction that we saw yesterday. Now this one has secured a 5,400 crore rupees EPC order from Bharat Coal Gasification and Chemicals. It's a JV between BHEL and Coal India. This is for coal gasification and raw syngas cleaning facilities. So yes, on the back of this order win also, the stock is doing pretty well. But apart from that, Antique has come out with a report and called the recent 10% fall unjustified that we saw yesterday in the stock. Now this, remember, was triggered by reports on possible easing of curbs on Chinese power equipment companies. It was a report based on Reuters source-based report. But now Antique says it has first of all maintained a buy call with a target price of 349 rupees and says that such policy changes are unlikely given the strategic nature of the power sector. In fact, it has reiterated BHEL's dominance in thermal power, its leadership in coal gasification technology, and also highlighted that 2.2 lakh crore order book. So yes, very positive report coming from Antique, and hence the stock is managing to hold on to green today.
All right, moving on from BHEL to the next counter that is up and away 2.5%. That's Petronet on the back of an upgrade by JP Morgan that is maintaining an overweight from a neutral stance, and they've also hiked the target price to 335 rupees. Now they've upgraded Petronet to overweight and increased the target price as well because the revised target price is implying an upside potential of almost 18% from the current levels. Now, according to the brokerage, Petronet LNG's earnings momentum is expected to improve on the back of better volumes following the commissioning of the 5 million tons per annum Dahej expansion in March, and JP Morgan also cited that 5% tariff escalation and lower impairment costs are the key positives. Now, the reduction in the impairment costs could also lead to an upgrade in the consensus earnings estimate for FY28. Now, while the brokerage has flagged potential renegotiation of the Dahej tariffs and risks arising from the PDG capital expenditure as key valuation concern, but it said that these issues are likely to remain rather unresolved for some time. And in the interim, JP Morgan believes that improving earnings should support the stock. On the back of that, they're maintaining an overweight call on Petronet, and that stock is up and away 2% in trade.
All right, so that's up and away in trade about 12%. But Kunal, you have also picked out Petronet from a technical perspective. It's trading about 2% higher right now. Past month also, it has seen decent momentum, gains of about 7%. So tell us, where do you see the stock headed now? Is this uptrend going to continue?
Yes, sir, definitely we can see some good upside momentum. It is counter right now. Counter is trading at 288. If you look about technical structure, right now, stock is trading above 100 days moving average. Not only this, stock has already given a breakout of its upper band of symmetrical triangle formation. And if you talk about weekly chart looks more attractive than the daily chart, because stock has a strong support at 260, and this was a support which stock took the earlier, and afterward it went up to the level of 380. So we can expect some kind of replicate momentum at present level. Overall target and SL, if we talk about this particular size, then one can keep SL at 275. Right now stock is trading at 288. And if we talk about target wise, the way stock has been trading on its daily chart, first target would be at 300, and if stock breaks this level, the further upside would be there up to the level of 315. So yes, Petronet looks very attractive on daily and weekly chart both.
Alright, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll get you more buzz on the other side. Stay tuned.
Vodafone Idea in focus after communication from DOT on AGR dues, which will be frozen for the period of FY7 to FY19, with annual payments capped at 124 crore rupees for 6 years. Remaining AGR dues will be paid annually between March 2036 and March 2041.
Eternal is a beat after Goldman Sachs maintains a buy with target of 375, implying a 33% upside. The recent correction is attributed to concerns over quick commerce slowdown, though Goldman believes multiple growth levers can offset competitive pressure.
The US Commerce Secretary says trade negotiations with India stalled after Narendra Modi did not directly engage Donald Trump, calling the deal Trump's to close. The US then moved ahead, leaving India trying to re-enter talks after others were already finalized.
In a major cue to watch tonight, US importers are bracing for a potential $150 billion refund battle as the US Supreme Court weighs the legality of global tariffs imposed by Donald Trump under emergency powers.
Hi there, welcome back to ET Now. You're watching Market Fatafat with me, Kanishka, Sarkar and Ankita, Saxena, and we're discussing all the top buzzers in trade today, and one of them definitely is Eternal, which is actually managing to hold on to the green and is one of the top Nifty gainers in trade today. Why? Because we've seen a Goldman Sachs report that has reiterated a buy rating on the stock with a target price of 375. There's a small cut from 390 earlier and still implies an upside of about 33% from the last trading levels. Now remember, the stock has corrected recently on concerns around a slowdown in the quick commerce growth and rising competitive intensity. However, Goldman Sachs believes that these worries are overdone and that quick commerce penetration is still very low at just about 5% of the total addressable market, and growth is expected to be fastest among peers. While competition that is likely to remain intense, Goldman Sachs does not see any material impact on Blinkit's long-term margin profile. Margin expansion, however, it may be uneven in the near term, but the company has multiple levers to offset competitive pressure. That's the word coming from Goldman Sachs, and hence the stock is doing pretty well in trade today, at least managing to hold on to the green, and otherwise weak market up about 0.5% in trade right now.
All right, moving on from Eternal to Ujjivan Small Finance Bank. Kunal, talk to us about Ujjivan on the charts, because this one's done very well. In fact, this has been a clear outperformer, 25% gains in the last 6 months. On the charts, do you see more upside to this counter? Kunal, you need to unmute yourself.
Yes. Sorry. Right now, definitely it means we can see further upside momentum in this counter. Right now, trading at 59.30 level. Stock has already given a breakout of its previous stock, which was placed at 56.70. Not only this stock is trading near to its 52-week high, and if it gives a breakout of its 52-week high, then it will enter into the uncharted territory. And afterwards, even we may see a very good upside momentum in this counter. Stock has been trading above all its long-term moving averages, and if you talk about chart pattern analysis, then stock has been trading in its higher top, higher bottom formations. Overall chart looks very attractive at present level. One can get into the stock at present level at 59.40. And if you talk about SL wise, then for trading perspective, one can keep SL at 56. If you talk about target wise, first target comes at 63, and if stock break this level, then further upside would be there up to the level of 66.50. So pretty well upside momentum would be there in this counter during upcoming trading session.
All right, moving on then to the next counter that is in focus today, and that is Vari Renewables that is in focus because that's declining more than 2.5% after the company announced a reduction of the capacity and the corresponding contract value of a previously received commercial order from a subsidiary that's called Vari Forever Energies, and the company has revised the capacity and contract value due to the evacuation considerations and the optimization of the DC overloading. Now, following the revision, the contract value has been reduced to 1,039 crore rupees from an earlier 1,200 crore rupees, while the project capacity has been scaled down from a 704 megawatt alternating current to 1,000 megawatt power, and all of those other terms in order have remained unchanged, but the project is scheduled to be completed in the financial year of 2026-27 as per the terms of the order. But on the back of this downgrade, Vari Renewables is in focus, trading with cuts of almost 2.5%.
All right, so that's Vari Renewables for you. But another company stock which is actually trading under heavy selling pressure today, that's Elecon Engineering. They reported a very weak set of numbers for the third quarter with profitability under heavy pressure despite that modest revenue growth that we saw. Revenue has seen a growth of about 4% on a year-on-year basis, but that fell 33%, whereas the EBITDA saw a decline of 23%. Margins also dropped very significantly to 19.8% level. That's down from 27% last year. And the company says that this was impacted mainly due to subdued performance in the gear division. Gear revenues were largely flat as delayed order inflows in the first half affected execution margins. Margins also saw a very sharp decline. But the MHE segment, that saw better revenues, about 16% growth on a year-on-year basis, supported by strong domestic demand. However, margins here also moderated a little bit. In fact, the management has highlighted last year's base that included a one-off gain, and hence we are seeing this kind of a comparison as far as the Q3 is concerned. The order intake stood at 700 crore rupees for the quarter gone by, which takes the total to 1372 crore rupees. But yes, the stock definitely is under heavy pressure because of the overall weak results.
All right, moving on from that to ICICI Prudential Life, Kunal. On the chart, what do you see for this counter? Now, in the last 1 month, it has moved up 10-odd%. Do you see that up move to continue? What are the levels to watch out for?
Well, if we talk about ICICI Pru Life Insurance, right now trading at 686, and overall insurance counter looks very attractive at present level. But if we talk about particularly ICICI Pru, on a smaller time frame, stock has been trading its higher top, higher bottom formation. Not only this, stock has been trading above its 100 days moving average as well. And if you talk about weekly chart, on a weekly chart, stock is trying to trade above its recent top, which was placed somewhere around 685. Stock is trading above this level. So if you get if you get the weekly close above this level, then further upside would be there based on this technical structure. So target wise and SF wise, if you talk, then downside strong support comes at 655. So one can keep SL at 650 for safer side. And if you talk about target wise, first target would be at 713, and if you stock break this level, then further upside would be there up to the level of 760. So pretty well upside momentum would be there somewhere around 10 to 11%.
All right, thank you, Kunal, for that. That's ICICI Prudential for our viewers. On that note, we'll let you go. Lovely chatting with you today and highlighting all the stocks that are in focus. All right, and with that, it's a wrap, not just on this show, but also my short journey here at ET Now. And before I sign off, I really want to say a heartfelt thank you to all my co-anchors, Ankita, Srishti, Ashesha, Ankur sir, Mansi, Kavita, Snehi. It wouldn't have been possible without you all, and our ever dependable PCR team, our directors Akshay sir, Ravinder sir, Santosh sir, Namrata, Gopal sir, Vishal sir, Gaurav sir also, and our producers Aditi, both of the Ruchiraj, Anjali, Patricia, Ananya, Shaurya, Ishita, our incredible research team, Ravinder, Shivam, Ishika, Harsh, Mitali and Meryl, all of you, thank you so much. We also have a wonderful ticker, guest coordination, assignment and camera teams. And of course, last but definitely not the least, Aisha and Sajid for trusting me and giving me this unforgettable opportunity at ET Now. It was my first time anchoring and being in the research team, and it's been an opportunity I've never seen before. So yes, for one last time, it's a goodbye from me, Kanishka Sarkar, and also Ankita Saxena. But viewers, you don't go anywhere because action continues right here on ET Now.